Welcome to thestockminer.com. I'm your stock miner, Brian Johnson. We did have the Fed speak today. Didn't make much of a difference. We got housing numbers this morning. We got the Fed talking today, and it overall didn't make any real difference in the markets. As soon as the Fed spoke, we got a quick break to the upside before hitting a wall overhead at right around that 10,800 mark, which we had mentioned in the videos, before breaking back to the downside. So at the end of the day, we actually had, gasp, if you can believe this, a couple of the indices finished down. The NASDAQ was down and the S&P was down. Dow Jones was still up ever so slightly, but like any big battleship, takes it a while to turn around. So looking at the Dow on a 60-minute here, let me update because it just rang. There we go. You can see where we finished, 10,761. Still firmly in a nice bullish move here, but getting tired. Very, very tired. Let's look at the daily for that 10,800. And you can see here where we kind of came up to this level, 10,800, and I mention this all the time. You know, I like 10,700, 10,800, 10,900 obviously being the bigger level up here to watch. But every little piece of ground that the bulls try to grab is met now by a little bit more and more selling. The only caveat to that was, of course, yesterday when we had the huge shoot to the upside. So today, yes, we did move up, but more of a subdued, quiet move up. Once again, I do not care if you go long. Going long's great. We're in a very, very strong trend here. But you got to be cautious. You got to be cautious. When this thing decides to turn, I think it's going to be violent. Now, are we dropping to, 9,000 on the Dow? No, that's not what I'm saying. Just for the pullback. Okay, we got to look at everything on a move down as just a pullback. It's just that you have to be very cautious up here in the same way that a lot of people got caught back in this area, the April time frame, with that run up, run up, run up. And I kept harboring on, listen, when this thing falls, I really think it's going to be a pretty major one. I think the next pullback is going to come kind of hard and heavy. Once the selling starts, I think a lot of people are going to go, yeah, it's time, and they're going to jump in as well. So we'll watch these moving averages on any kind of a pullback, though. This is really the area you want to watch very closely. Anything around here from about 10,300 to about 10, let's call it 10,450. These are the areas I'd be looking very, very closely at for a pullback in the markets. Breaks hard below that, and we could have a different beast on our hands. NASDAQ on a 60, holding the blue line well. You can see still no breaks whatsoever of it. Flirting with and breaking through the 2,000 mark today, only to come where? Right back to that 1989-ish area. So 1990, 2000, holding up very well up here. Very extended on this end, putting in a what? Yeah, I can't hear you. That's right. Potential reversal candle. Thank you, thank you, thank you. Yes, not a reversal candle. This is a potential reversal candle. We need some sort of movement by the bears tomorrow. We have not seen that. We've seen lots of these reversal candles on the way up, much like we did back in April. Gee, go figure. So, and still the market's continued higher. From a weekly perspective, too, now a little bit of a pullback. You can see that here. I wouldn't even call that a pullback, but you can see for the week now we've had a little bit of a drop coming into the middle of the week. Let's see if this candle can hold its ground by the end of Friday. SPX breaking blue line, held up very nicely, broke through, and now it's dancing with the blue line. High today of almost 1150. Wow, what a monster run. Look at this, from 1035 to 1150. Really no pullback whatsoever in through this area. Strong move by the bulls. Has to make you question, if you're an Elliottian, exactly where we're at in the count. Is this a bearish count? Is this a bullish count? I don't know. The bulls are making a pretty darn good case up here. Once again, it's going to all rely, I think, on the pullback. Pullback I'm looking for 1100 to 1090 area. Let's watch those areas closely on any kind of a pullback, if and when that happens. Well, it's more when, not so much if. SPX on a daily here above this upper level into the 1140. Now held here today. Strong move yesterday. Kind of a resting day today. More of a consolidation day. But as long as it holds up there, bulls still firmly in control. No reason to think that we're in for any kind of major drop. SPX on a weekly still as well above this overhead resistance until that changes back below this 1120-ish area. No reason to think that the bulls can't carry this thing a little bit higher. Maybe bleed it out. Look at this. Look at this slow bleed that they had a while back. Until this action starts to resume to the downside, no reason to think that it can't bleed its way a little bit higher there and just put the bears in a ton of pain. Lining up right now for a very, very good day or a good month for September as it stands right now. Go back and look at previous Septembers, though, guys, and don't be surprised at what you might find. And that is, we do very well, actually, for the first half of the month, and then the last half of the month, everything just completely falls apart. Now, we're pretty deep into the month already, though, so with about 2 weeks left, things are going to have to really start accelerating for the bears if they're going to take control of this market before the end of September hits, because right now things look pretty good. VIX was up, market was down, mixed. Now, so you know what? We are really getting a lot of mixed signals within the VIX right here. Some days it confirms, some days it doesn't. Getting a divergence today, I would absolutely call that a divergence today. Notice how we're up almost 3% today, but really the markets were pretty much break even. So lots of divergence here in the VIX from day to day. So we're really waiting to see if this thing's going to break. If it'll get back below this 21-ish area, I think then that the fear is really starting to subside and we should see a higher push to the markets. But until that happens, we got to watch for, breaks up and above these areas. Those of you that are options traders, you've got to be watching this closely right here, because any big spike in the VIX could mean a pretty good play for you options traders. Weekly, you can see where we've just been bouncing kind of sideways. Of course, fear's not in, it's not out. I'm going to give the benefit to fear's out, really. Nobody's real scared right now. But I'm going to tell you, after watching this now for the last few days, I really started kind of diving into the VIX the last couple of days. There's uncertainty. There is absolutely uncertainty here in the markets. We're just not seeing the more calculated moves as would be expected with some of these moves in the market. The market goes way up. The VIX isn't necessarily going way down. So we will watch this very closely. Just not seeing the kind of confirmation lately on a more regular day-to-day basis as I'd like to see. If the VIX diverges a couple days, well, okay, whatever. I'm not going to worry about it. But man, it's been about every other day or so, it seems like we're getting some sort of non-confirmation from the VIX. So I'm very interested to see which way this is going to break here. Apple on a tear, up another 54 cents. Not a lot, but I mean, come on. Let's just be real here. This thing's up $1 million in the last 2 weeks or so. It's such a huge climb. Putting in, once again, what a potential topping candle here. Once again. So we're waiting for breaks back to the downside, looking at it as only a pullback, period. Anything in Apple right now is pullback. Has to be viewed as such. Up and above this big level, this 280 will be interesting to see if it'll hold by the end of the week. If the markets decide to drop and the Apple goes with it, let's see if it'll hold 280 by the end of the week. And that's the most important thing, where we close. Not necessarily where we go, but where we close at the end of a week. FAS back up and above these areas, only to come kind of falling back down here today. This is why it's so important that you play this on an intraday basis and not necessarily hold overnight. You can see where we kind of pulled back a little bit today, but it's still not the most bearish candle. You can look at this as a dark cloud cover, I guess, if you will. Once again, only potential reversal candle here. FAZ, same kind of a thing. Moving back up into these moving averages. But until we get above them, still really nothing broke from the bear side. So don't go calling bottoms. Don't go calling tops. You're going to kill yourself. Just going to blow yourself up, guys. Wait for confirmation. Confirmation for me, you get above 13 bucks. Okay. All right. Not a bad place to start looking for a potential long trade. The more safe place is, of course, above maybe 13.25 or 13.50, somewhere up in here. But if you want to be more aggressive, above 13 bucks, and I'm sure that most of you probably are more aggressive, being how you're playing these 3-time ETFs in the first place. So watch for breaks above $13 and or below now 13 or 12.25. I'd say $12 is probably the better place. We're going to get, I think, into some pretty tough support down here. Any kind of a quick run down and through this, it might be time to jump on the bandwagon and get bearish, but I would wait for breaks of $12 if you're going to get overly bearish on the FAZ. Okay, so that'll do it for today's video. We saw some volatility in the markets, but ended up going nowhere for the day. So the Fed spoke, there was a big spike upwards, followed by some pretty heavy selling coming in right behind it. No real move, no indication. The only thing we can look at is what are the charts telling us, and right now we have to remain neutral to bullish on the markets, but cautiously bullish. Be careful if we're going to take any long positions over the next few days. And I'll be back with you again tomorrow night. Bye.